Wagner here, just about 12 noon in Honolulu, 5 o'clock in New York. It is Monday, 18th day of December, 2017, and this is the Daily Report for Gold and Silver. Moderate upside moves in both gold and silver today, and that in light of a risk-on environment still prevalent in the market. Gold did close up about $7.20, $12.64.70. Silver up about 11 cents at $16.17. We did send out a special trade alert this morning, and we will cover that in detail when we pull up the technical studies section of today's show. Dollar down about 0.2%, 93.24, and that all in light of record closes across the board in the Dow, the S&P, the NASDAQ, and the Russell, all of them closing in record territory. In fact, the Dow had its 70th all-time new record close this year alone. Quite impressive. Bitcoin did start trading on the Chicago Mercantile Exchange today, and we had the CBOE Bitcoin up slightly with the Bitcoin from the CME down. But what we noticed more than anything else was the prices coming into alignment between the two futures exchanges. Gold prices are modestly higher today, currently trading up about $6.50 at $12.64. We are witnessing follow-through buying to the lows that were achieved on Tuesday of last week when pricing came to a 6-month low at $12.38 and began to track higher. That is resulting in a V or key reversal in market price. Today, we have seen the market trade effectively higher in terms of its open to closing range than we have seen both on Friday as well as Thursday. We can see that the latter part of this week was really defined by very small bodies. In fact, throughout the week, we had very small bodies. This particular candle here, I believe, is a little bit deceptive in that when we fixed our closing price on Wednesday, we had the market up about $16 or near the highs of the day. It only backtracked or came back lower during the afternoon trading session overseas. Nonetheless, the net result of last week's trading activity was the first week in the last 4 weeks in which we have seen gold close higher on Friday than its open on Monday. We already have, as I said, follow-through buying today, and what that is giving us in terms of a candlestick pattern on our weekly charts is a bullish Harami confirmation. Which brings us to today's activity and the respectable $6-7 gain currently exhibited in gold. 64.30 is our current bid. Now, we did issue a trade alert this morning, and what we spoke about was the fact that we have the follow-through buying that we were looking for. We are just at or above the 61% retracement area that we have labeled as a support area back in October and November, and then a resistance area once it broke below this particular price point. The fact of the matter is, now that we've seen the market pivot, we want to see an effective close at or above its 200-day moving average, which is represented on this chart by this red line and is currently fixed at $12.6860. Assuming that gold prices close in that area, it is safe to enter from the long side. Traders taking that call will get in roughly between here and 65, depending on when you took the call. We are putting stops below these lows of this candle and this candle, which reside at roughly 43 to 45. Now, in terms of our upside target or exit strategy on our current trade, the following are the levels that I'm looking at for potential resistance. I believe there could be minor resistance at the 50% retracement level, which comes in at 1283, but I believe that that will be minor with a clear and decisive move. I think that our target of 1300 initially is quite achievable. If we break above there, that will really illustrate that we've got a protracted rally. And in terms of seasonal tendencies, we know that gold prices typically bottom towards the end of the year, beginning of next. That would signal that this particular key reversal that we witnessed last week was the beginning of not only an extended rally, but a rally that's going to propel gold prices dramatically higher. we could see a rally of at least $100 to $150 in that case. Therefore, maintain your current long position, maintain your current stop. Traders, we are looking at a daily silver chart. Silver also showing a respectable upside move, up about 10 cents at 16.16. For those traders that go long silver when we issue our long gold recommendation, I believe that we're also witnessing a key reversal that is going in tandem with gold. Our levels of resistance that we're currently looking at are a minor level of resistance at about 1634, with a more pronounced level of resistance sitting at around 1670, and absolute resistance sitting at about $17 to $17.25. Traders, the risk-on environment that has been so prevalent and such a overall defining characteristic of U.S. equities continues to be in the forefront. The Dow Jones Industrial Average today is set on pace to close at a new all-time record high, currently fixed at 24,806. Traders, Bitcoin futures began to trade at the Chicago Mercantile Exchange yesterday night. They have been trading at the CBOE for over a week, and although the net changes are different, with CBOE Bitcoin futures showing up $905 on the day, and Bitcoin futures at the Chicago Mercantile Exchange, and as you can see, we have almost no data filling in at 18,975, that's showing a net change of down $525. What is most interesting to me is the fact that both exchanges are trading Bitcoin. It gives traders a chance to arbitrage, so if there's a huge disparity between the prices, that will level itself off quite quickly. I do not yet see the kind of volume and liquidity that I'm comfortable with. We will wait throughout the week and see how that develops and grows as we go into the end of the year, but we certainly have an interesting market to trade in, and I believe that the opportunities in Bitcoin will be rare, unprecedented, potentially a lot more room to the upside, given the caveat that we will see a crash and burn at some point. But I believe before we get to that point, we will see more dynamic upside room in Bitcoin. We are still awaiting our first trade, and that, of course, is dependent on a point in time in which we have good liquidity and decent volume in the exchanges that they trade on. Given that we have seen such a strong equities market, and for the most part, a strong US dollar, the recent upside move in silver and gold have been substantial, because I truly believe that we have seen part of that gains shaved by the risk-on sentiment that we have. As long as we can see gold prices effectively stay at this point and begin to track higher, especially above the 200-day moving average, we will get the technical confirmation necessary to confirm that last week's low was the beginning of a key reversal. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.